Okay, so this is a recap of the trades I took Wednesday, April 22, New York Open. So let's move on to the regular trading hours tab and chart, just because this is what I was looking at the whole time to give me a clear context and establish the bias I had for market open. So market open, we had a strong push down, and honestly, I was thinking first for us to close this opening range gap and peer down into the previous day low, just because on the extended trading hours, the electronic trading hours, we've had so many points of interest to the lower side, like recent points of interest, rather than looking at the previous day highs, which was further back in the weeks before. But lo and behold, because I switched to regular trading hours, I saw a shift in market structure simply off of this 5-minute bearish candle. As you can see, we're on the 5-minute chart. And after I took this first initial loss, based on continuations and order blocks, this strong rejection of the low side and close over the body with this bullish candle, I moved over. So like here, I identified this closure over the 5-minute pullback right here. I don't know why it's up there. Probably need to be cleaned up. So that closure over the 5-minute creates, for me personally, that creates some sort of order block, right? That order block was this right here. And in this order block, we simply saw a fair value gap here get rejected, not fully closed out of down here, like 1, 2, 3, 4. If we do a 4-candle movement, we reject price to the low end. And then once again, my main point was that this shift in market structure right here, this 1-minute shift in market structure, where we have a clear 2-candle pullback, into that fair value gap, creating valid market structure for an order block, as I marked out during the session. So during the session, when this order block is created, I look for another confluence within that, and that was this fair value gap, bullish fair value gap displacement. So off the rip, I entered right here because we had a 15-minute high ORB, open range block. At the same time, this counts as a market structure shift, quite a strong one too. So multiple confluences being used, order block so far, fair value gap. Now I'm introducing market structure shifts. Along with that market structure shift, we also have a change in state of delivery, right? And you could use the area between the MSS and change in state delivery as an entry point with your stop loss at a recent higher low, or like a swing low. This would be the current higher low if you entered within this area, which would have been right here, right? That would be okay, but the risk to reward would be kind of ignorant of how the market provides, right? So volatile market, and if you have larger stop losses, you'll take larger losses. So what I went for was I identified this fair value gap within this OB. So two confluences, that was a lot stronger. So after rejected here, right, I entered once again because this strong rejection is just another confirmation of price showing favor to the upside. Let's move this further to the side. Again, this is just the 1-minute price action read. So let me take away things that do not matter and let us go on. So first, to recap why we had a bullish bias, was first, closure over this 5-minute pullback, which is this leg right here is the closure over the 5-minute pullback. This was the 5-minute pullback, right? If we move on to the 5-minute, actually this was, what is that? The body, closure over the body of the 5-minute pullback, right? And anything above that was wick. That's something you can't see on the 1-minute. So that's why you have to move to at least like a higher time frame to understand the relationship between the wick and the bodies. And then as the market continued, you have further confirmations. Just on the 1 minute, quite simple. But the reason I targeted so high and why I saw so much opportunity on the high end was if we started here, the low, as market was moving away from our current low, right here would be, that's 190 ticks. Above here, 268, right? And if let's look to TradingView real quick. This is why you need an understanding of previous market structure and to believe in your in the data that you collect. So looking at this chart on TradingView of the same MNQ with the New York sessions marked in this orange block, you can see the previous day we had 329 points ticks of movement. And the other day we had a total of a 254 tick range. The day before 248, 291. So we're averaging at least 250 points. So from the low to the high. So this was a 200 point move so far of the day. So if you aimed for 100 points and theoretically you took your trade at either the low or the high of the market, you would have at least 100 points of movement. And that is good enough to make $100, $200 with just two micros of MNQ. And I entered once again on this 5-minute fair value gap because within this 5-minute fair value gap, we had a strong reaction to this 1 minute, right? And then price continued up. But once again, as we see deeper pullbacks into fair value gaps, we can also gauge how strong market volatility is and the difference between this pullback into the 50 range, the consequent encroachment of the fair value gap, and then well past the consequent encroachment into outside the bottom of this fair value gap, showing that these bullish fair value gaps are not holding as much. And then once again, as price continues up, the smaller volume of these bullish candles show decreased strength in buying in buyers, basically it. In the decreased strength in buyers, I closed off of this 3-candle closure. This is a price action 3-candle closure where 1, 2, 3. You can see that price appeared above, but in the last and third candle, price fully closed over this peak, right? And that is a strong sign of sellers taking over. Not like a it's a telltale sign of like that sellers have taken over immediately, but at least short term, you know. And in the short term pullback, you can see a development of lower highs. But in this development of lower highs, if you go to a 5-minute, you can also see how price kind of flips, you know. The push up and price reveals absorption, right? This slow grind of price trying to push up. Finally, bears take over for 5 minutes or so and close body over wick. And this is a point of interest, piqued my interest at least, to show that when bullish price action came back above, this would be another setup, just like what we saw here. So that was the biggest takeaway. This kind of formation on the 5-minute, again, this trade would still be going on if I was not locked out, but I made the profits that I needed today. And, I took what the market gave me. This was ultimately this move from here to 27,020 was the main movement of this morning. And those are the key takeaways from this session's trade. To recap, the main confluences I used was continuation. I can't spell. It's like 12 a.m. Continuation, right? Continuation, why? Because price closed over a pullback, right? 5 minutes, 1 minute, it doesn't matter. It's up to your strategy. With that, we have an order block Inside the order block, you have displacement, and the displacement is shown by the fair value gaps. And then, so that's one chunk of it. But to use these in a optimal sense, you want price to pull back and respect. What the hell? Respect. So price pullback and respected those levels. And once you get the respect, you can enter. That's exactly what we did here. Let me show you once again. So you have this initial order block right here, or you could even say this one, because this is also the 50, right? So price pulled back into this order block right here. Actually, no, it's not an order block until it closes above. So closed above at this point, price pulled back. And the only PD array that wasn't filled was this minute fair value gap. And that's why, let me reiterate again, that's why I entered. Although it's not below within the discount range, obviously this is the premium and this is a discount of this PD array. I entered because, discretion is your friend. And to build discretion, you have to build confidence in your strategy. And once again, that is the hopefully concise and clear description of like why I took these trades once again. Ultimately, my biggest help was using RTH to not get mixed up in the extended trading hours price action, because there's a lot of points of rejection. But again, points of rejection, I have it on my personal website. Rejection versus absorption right here. What do you see? Rejection, 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 rejection. This day actually I was biased to sells because I was like, okay, we have clear points of what I call low resistance liquidity, right? That price could flush out. And I just did not take into account that price was continuously trying to push higher on these red arrows, and that is absorption. So rejection is a strong rejection in price, right? So if price would want to visit it again, it's not going to push through. Absorption is the weaker side. What do we see here? We see strong rejections in price and a lot of absorption to the high side. So for me, once price took off on the RTH, in my eyes, I could only see it continuing up. And I have a cold right now, so it's kind of hard for me to speak for long amounts of time. So I'm just going to end it here. But I'll probably do some sort of video on order blocks, fair value gaps, and continuations in price for this type of market structure. But that's it for today. Thank you.